Apple surprises investors and promises a big investment in the U.S. More on that in just a moment. But we begin with the incredible day on Wall Street. Stocks rose and rose and rose some more. The blue chip Dow index closed above 26,000 for the first time ever, marking the fastest 1,000-point move in history. Recall, it was just on January 4th that the Dow first closed above 25,000. The rally today was broad, with all 11 sectors posting gains and all of the major indexes finishing at records. As one strategist said, there's just no reason to sell, which, come to think of it, may be a reason to sell, but not today. The Dow Jones Industrial Average climbed 322 points to 26,115. NASDAQ added 74. The S&P 500 was up a sporty 26. If you need even more evidence of the enthusiasm for equities, a new survey puts stock market optimism among professional investors at a 32-year high. Now, what happens or tends to happen when we see an acceleration like this? Mike Santoli takes a look.
Has the stock market rally begun to overshoot? There's no formal definition of a bull market overshoot. It's not the same as a market bubble, not a mere short-term sugar rush. It's a phase when stocks accelerate higher from already high levels, the public gets excited for the market, and investors extrapolate good economic news far into the future. Evidence that we might be getting there? The rally has picked up plenty more energy in 2018. The S&P 500 is up nearly 5% since the tax cut law was passed less than a month ago. That's twice as much as 2018 earnings estimates have been raised. Riskier, more cyclical stocks are pulling away from defensive sectors. Some measures of investor sentiment and market momentum are pushing record highs. Flows into stock funds in the latest week were the sixth heaviest in history. These are all signs that stocks could be overheating in the very short term as the public embraces a richly valued market newly energized by a big corporate tax cut. The market's volatility index is actually up this year, even as the Dow has gone higher, an unusual combination that suggests the market might be in for a wider two-way swings this year, even as the uptrend looks intact. If this is an overshoot, it could last a while and be pretty lucrative in the best case. The 90s bull market probably started overshooting in 1997 and doubled in 3 years before the peak, for example. The gains posted in this phase often don't fully survive an eventual bear market, whenever one might hit. The good news? The market seems out of reach of the bears for now. For Nightly Business Report, I'm Mike Santoli.